Now, in the second segment of our interview, I'd like to talk a little bit about your background first and foremost, and then lead into what you like to invest in. And I know that you have an institutional background. You've worked at Goldman in the late 90s, and then you worked at a macro hedge fund, and then you started Real Vision. So I'm curious as to why you decided to leave corporate investment banking and then macro investing and start a newsletter, a premium newsletter, and also one of the more popular finance channels on the internet. What made you switch from being a participant to interviewing participants?
Well, look, I've been very lucky. I've been at the heart of the global financial system. I started and co-ran the hedge fund sales business in equities and equity derivatives at Goldman. My clients were the world's most famous hedge fund managers, the big names that we all know. I got to speak to them every day. I learned a lot, and I dealt with hedge funds for my entire career. One of my clients said, come and run a hedge fund for us. And I started and ran the global macro hedge fund for GLG Partners, which was the largest hedge fund firm in Europe at the time. I then realized that game was changing as pension assets had poured in and insurance assets had poured in. And they wanted to turn hedge funds into bonds. They wanted 8% returns and 5% volatility. And the macro world was actually a very different world of higher volatility and higher returns. And so I thought, well, the only people who are going to win in this game are asset gatherers. You won't get rich out of performance. So I decided to leave. And that was the right call. I mean, that was the rise of the massive hedge fund platforms. So the people who got rich were the people who had the platforms. It never came to the people who were the old school Stan Druckenmiller, Julian Roberts and George Soros, that kind of thing. I then started writing macroeconomic research and investment strategy because I was one of the more experienced people in the entire hedge fund industry. So I could share my experience, my macro framework. And to this day, most of the world's or many of the world's biggest hedge funds, both macro, special situations, events, long, short, subscribe to Global Macro Investor, family offices, sovereign wealth funds, governments, all sorts of people. So it's really amazing network. But I was living in Spain in 2008. And all the way through up until a few years ago, 6 years ago, we had the financial crisis, which I kind of knew was coming. You know, a lot of the people who were in the film The Big Short were clients of mine. We all kind of knew what was going on. Then the European crisis came along, and I was right at the epicenter of it. I predicted a lot of it, and we almost lost the entire banking system in Europe. And what was awkward is, you know, quite a few of us made money out of that. But friends of my parents would say, but why didn't we know? Why did nobody tell us that our savings were at risk? Why did nobody tell us that our pensions were at risk? And that did not sit well to me. Why was there a difference in the value of information or the quality of information that ordinary people got? And so I thought I had a moral duty to change that. And the advent of video gave us that opportunity. So we started Real Vision in 2014 with the passion and mission to democratize the very best financial information. And what we did was we reached out to the people who are impossible for anybody to have a call with, let alone speak to, the world's most powerful and famous hedge fund managers, people in my Rolodex, and said, listen, will you come on and speak for an hour and a half and tell us how you do things, what you do, the lessons you've learned, and what your thinking is going on right now? What are the opportunities? What are the risks? And they said, yeah. And that was amazing. So they came on, and that was the start of Real Vision. We kind of changed everything about how financial media engage. We do analysis, not news.
When you started Real Vision, you must have realized that there was a hole that you could have filled that was left by mainstream media, the financial news of the time. What was this hole, Raoul?
The hole was 3-minute sound bites for an average age of 68 years old, and a focus on driving adrenaline through financial markets, flashing headlines, breaking news. What they weren't doing was taking a fiduciary responsibility for people's money. They actually don't care. And that was the difference. We said, well, what's the best way? We're not going to spoon feed you. The best answer is to give you as much information as possible that's been curated. We won't give you a biased view. I may have a view, but Real Vision doesn't have a view. But we're going to give you access to the kind of information that the world's best financial professionals get. So now the playing field's level. Now you have a chance. And the media was doing the opposite.
Yeah. Real Vision Crypto is something new that you're launching. Tell us about that.
Yes, I have been involved in the cryptocurrency space since the European crisis. Again, we almost lost all of our banking system in the whole of Europe. It made me think that we needed to find solutions. And I spent some time with some others trying to set up the world's safest bank. And one of my clients from Global Macro Investor said, you need to take a look at Bitcoin. I looked at Bitcoin. I suddenly realized that maybe this was the answer. I started investing back then. And I've been writing about it for a long time. I knew that the macro world and the crypto world were going to collide at the next recession, and they were all going to become part of the same thing. So we launched Real Vision Crypto because it's going to be the big part of the financial markets, the new financial markets that everybody needs to understand. This is not only the biggest investment opportunity I've ever seen, but also is going to change everybody's lives.
I wonder what inspired you to look into crypto more, because looking at your background, you had a very traditional finance background. When you were at Goldman, Bitcoin wasn't even born yet. And so when a client of yours presented you with this completely new asset class, you and like a lot of people didn't dismiss it. Why?
I'm a macro guy. My job is to look for opportunity and then assess it. A lot of people go from the don't tell me what to do approach, which is more traditional. I know what I know. Macro is all about what you don't know. Where is the opportunity? That's why I talk about Iran, because nobody else is investing there. That's where alpha is generated. That's where you make money. So when somebody said, listen, I think there's a perfect asset here that really has this unique property of limited supply, I then looked at it and said, looks like gold to me. So I wrote the first paper back in 2013, 12, of, okay, if it's got the same attributes as gold, I look at its stock to flow ratio in a very crude way. And I said, this thing's probably worth $1 million with gold at 1,300 at the time. And that became quite a famous article in Silicon Valley and on Wall Street. And so it made me think, okay, here's something different. And it answers a lot of the problems.
Yeah, I get this question a lot from people that I know and investors who watch our show, is whether or not blockchain is the way of the future. And I think there is some confusion as to whether or not blockchain should even exist in the same sentence as gold, something with an established history of $5,000. What is your view here?
They all exist together. Gold was the only answer for a parallel financial system, and it has always survived for that. So it's always been the denominator of which we can price things. So, people who've been involved in gold in a long time know basically the price of a cow, a suit, or anything else has basically held its value against gold. So gold is the asset of value. But we're in a digital age now. The world has changed entirely. You and I are in different countries talking digitally like we're in the same place together. Everything has changed. When something like Bitcoin comes, it offers a different solution that complements gold, doesn't take it away. They don't have to be one or the other. They just both work for different people in different times. And blockchain technology, well, forget all of the, should it be Bitcoin? Blockchain itself is an amazing technology to verify trust. If you think of the financial markets, when a company like Lehman Brothers goes bust, nobody knows who owns what. There's not enough trust in financial markets. Blockchain solves all of this. It also solves everything from custody to payments layers to settlement, and you can build these amazing applications like decentralized finance on top. So there's two revolutions going on. One is the revolution of money, which is Bitcoin, and one is the revolution of the entire internet of value, which is all of these blockchains from Ethereum to, whatever you choose, whichever blockchain you're looking at.
In 2017, the popular comparison in media was that Bitcoin was like the tulip mania. Now, when you read these headlines, what went through your head? Were you still, did it cause concern for you, or did you dismiss them?
So I was long most of 2017 and sold into the rally too early, but I did great. I made 10 times my money in that period. And yes, it was exhibiting a bubble phase. Now, tulips, as far as I know, still exist. They just don't trade for those prices. And gold has been through bubbles. And, speculative manias are normal. Is the asset worthless or not? That's the question. Clearly, it's not now. It's lasted the test of time that there is a perceived value and trust in the asset. So will it go through speculative manias? All assets do. Maybe equities are in that now. And that's normal. That's just human behavior. But at the time, I was nervous because it was going up so fast and I didn't yet understand as much as I do now. I've given retrospectively, I would have sold out again, maybe not as low as I did. I think I sold out at 2,500. It went up to 20,000. I would probably do the same again because you don't need to have all the peaks and troughs. You can try and time some of that cycle.
Yeah, you said that in 2017 you saw it as being a bit of a mania. What do you think now? We've reached all-time highs already.
This is wildly different. I have never seen anything like what is going on right now. You have a limited supply asset that now is a globally recognized brand that everybody knows, not everybody understands. But what's happening now is institutions are coming into the space. So first it was the hedge funds, the family offices. Soon are the pension funds and the investment advisors. And they're all coming in. And the more the market cap of Bitcoin comes up, it's about 350 billion right now, the more that they're forced to go in because it's such a ridiculously well-performing asset and they're so uncorrelated it is. So we've got a massive wall of money that's coming into the space. And for the first time in our lifetimes, we as ordinary people get to front run the institutions as opposed to them front run us. And so, my conversations of this is, this is real and meaningful and massive. Yesterday alone, I was speaking to the founder of one of the largest investment advisor firms in America. Investment advisors alone have 5 trillion in assets, and he's trying to get all of his advisors and advise all the others as soon as the ETF is launched to get up to 1% of assets. That's 500 billion from the investment advisors alone. It's incredible.
Do you think this institutional money has anything to do with the shift in attitude towards blockchain technology? Let's say blockchain existed back in late 1990, the 90s, early 2000s when you were still at Goldman. Do you think the banks would have adopted blockchain then?
Yes, they adopted the internet then. We've all seen these phases. These things where we're not going to use this. This is rubbish. Why do we need this? I've got a fax machine. Why do I need email? Suddenly, what's a fax machine? Look at all these .coms, aren't they? Mania. Next minute, it's normal. It's part of life. And Amazon's a $1 trillion company. The world goes through these phases, and the more conservative people, the less risk takers, tend to be later to the party. So I think the banks are late here because they're going to get disrupted somewhat.
I've heard a lot of different forecasts on our show for Bitcoin: 20,000, 30,000 by next year, 100,000 by next year, 1 million in a couple years. Can you help us reconcile this?
Look, again, none of us knows, none of us has a crystal ball. But sure. I use a number of measures. I use technical analysis, logarithmic charts. I use the stock to flow ratio from a guy called Plan B. People can find him on Twitter. That's very well constructed. I use a whole number of different yardsticks. Somebody sent me a report today that had been written about Metcalfe's law and applying that, the adoption of Bitcoin and putting it in price. They all basically come to the same thing. They basically come to, we're going to be somewhere between 500 and $1 million within 5 years. And we should be somewhere between 100 and 300 in the next 12 to 18 months. Okay.
Now, as institutional money flows in, I'm guessing that's a sign of maturity. If an asset were to mature, would that, correct me if I'm wrong, but would that not mean that they're in the end phases of their growth cycle?
I think it'll come in cycles. So let's look at the world where most institutions have a 1% allocation, much like they do to commodity markets right now. Maybe it's slightly bigger than that. Okay, so where do you go from there? Where do you go from the $1 million price target? It's now a lower volatility, accepted asset. Well, that's about then what happens to the central banks and fiat money. That gets very interesting because we're at the end of a debt super cycle. And maybe some countries, maybe it starts with the Latin American country, they suddenly put Bitcoin into their reserves. Maybe they start using Bitcoin as a currency. We don't know, but that next phase would be the next level from that, which is what people call, the Bitcoinization of the monetary system. Whether that happens or not, I don't know. But Bitcoin is basically a call option on all of that to come.
Yeah, it's a popular vehicle for day traders. Is that? Do you agree with that, or should you have a longer time horizon for something like Bitcoin?
Look, it's a popular vehicle for alpha. You can make money in this space. So I've seen day traders who can't make money because there's so many machines, high frequency trading firms, algorithmic firms in financial markets can make good money out of crypto markets. It's a place where it looks like financial markets 20 or 30 years ago. Things move fast, like commodity markets. So yes, if you're a day trader, I'm terrible at day trading. But as a long-term investor, the buy and hold opportunity is literally mind-blowing. We talked about some numbers. Let's say I'm an idiot and I'm wrong. It goes down 50%. Okay. So let's say I put $100,000 into it. So I've lost 50,000. Maybe I'm right and it goes up 25 times. Well, I'm risking 50,000 to make 2.5 million. 25 million, sorry. I mean, these numbers are crazy. Sorry, not 25, 2.5 million. So there is no asset class on earth that has a risk reward that looks anything like that. It's not a bell-shaped distribution here. We've got a very, very fat tail.
What about the central bank digital currencies that are rolling out? We're rumored to be rolling out across the world. Do you think that's going to significantly change anything at all?
Yes. In terms of the Bitcoin world, it creates digital on-ramps and off-ramps. So therefore, from my phone, I can instantly switch from my bank account to Bitcoin, back again, send you money, send somebody else money in a different country. It all works seamlessly. They are coming. Every single central bank has said it's coming. The Fed are dragging their heels the most because they have the most to lose here. They need to get it right because they're the world's reserve currency. But it is coming very fast. They also changed monetary policy and fiscal policy. So we've seen in this crisis, monetary policy doesn't work any longer. But you need to get money into different people's hands. When you've got a central bank digital currency, I can give you money directly. I can also give you a different rate of interest because I want to encourage you to save and me to dissave. You can give me negative interest rates to you positive interest rates. So we can use behavioral economics to run monetary policy and fiscal policy, which is a gigantic change to the world. We've been using very blunt instruments compared to what we can do once central bank digital currencies come. However, these are still fiat currencies. It doesn't get away the fact that the central banks will use them to continually print more money. That may change in due course. I've heard them talk about a new Bretton Woods, and one of those ways that could work is you agree everybody in the new currency basket, called it world currency, can print 50% of GDP all in one go. Now, you're not devaluing against anybody at that point. Sure, gold and Bitcoin go to the moon. And then that gives everybody the money for the fiscal stimulus that they need. And then after that, maybe you cap anybody in that basket at 2% money supply growth. Well, then it kind of looks like gold or Bitcoin. So there's a number of things can happen, but that debt's not gone away. We've still got problems here. But there's a lot of ways this game can play out, and it's going to be fascinating. And we have to not think of the world as it was and think of the world how it could be.
Okay, let's talk about your asset allocation for cryptocurrencies, because you told me offline 80% was in Bitcoin and 20% Ethereum. I've read that Ethereum might catch up to Bitcoin as the largest market cap coin in the world. Is that something that you subscribe to? Could you believe in that?
I think it's possible. It's platform over an asset. Bitcoin has this beautiful, pristine, collateral asset quality. But that doesn't mean it needs to be the biggest. I mean, gold's not the biggest asset, and gold has many of these attributes, most of them, in fact. So gold is what, an $11 trillion asset. So maybe Bitcoin should be $11 trillion asset. That kind of fine. But what's the global equity market worth? What's, all of those other things? That's how I think of Ethereum. It's like the rest of the space. Now, it's not only going to be Ethereum, it's going to be everything. So I do see a world where Ethereum can be much larger than Bitcoin in market cap. But it won't, maybe it trades differently. I don't know how this all works, but all I know is it's interesting enough to have some of it.
Final question. I noticed that gold is not part of your liquid portfolio. Why is that?
I sold it yesterday. And the reason being, even though I think gold goes up, I sold my gold yesterday because Bitcoin is eating the world. It is literally, I run all the charts of Bitcoin versus every asset, and it's broken out versus every single asset on Earth. And to such an extent that it's become such a dominant, such a superior trade in a portfolio that almost diversification doesn't work, doesn't matter. And for me, how I construct my portfolio, I have very aggressive risk in this, but I don't use leverage. And, I have other assets and I have income that I'm able to take this bet. But it is literally the most dominant asset I've ever seen.
Raoul, I want to thank you so much for coming on the show today. You ran through a lot, so it was very informative. Thank you for your time.
Not at all. And if people want to find more about crypto, just go to realvision.com/crypto. It's a free channel and you can learn a lot about this exciting new world because it's super exciting.
Yeah, I'm happy you shared that with us. Thank you for watching Kitco News. I'm David Lin. Stay tuned.